welcome to the Short Vol Show. Today is a Thursday, and it's a rainy Thursday here on Cape Cod. Let's take a look at the markets as we approach the open this morning. And it appears that we are mixed kind of. E-minis down 475 with the Dow up 56, Dow futures that is, and the NASDAQ futures down 56. So kind of a mixed bag here today. Kind of interesting. Dow up and everything else down slightly. VIX kind of unchanged here, 1227. You will notice though that Contango has risen a little bit. And with the VIX doing nothing, how does that work, you might ask? Well, what's happening here is that some of the edge that we have from the distance between the VIX cash and the or spot, as we call it. Some people call it cash, some people call it the spot. The distance between that and the front month future, some of that distance has turned into Contango. So instead of there being 175 in distance between the cash and the M1 future, there's only 160 now, but yet the distance between the M1 and M2 future has gone up by like 10 cents, and that's what creates the increased Contango. It used to be that the M1 and M2 future were like 80 cents apart. Now they're like $1 apart. It used to be that the distance between the M1 future and spot was like $1.75, $1.80. Now it's $1.60. So roll yield has turned into Contango. This just kind of illustrates once again that these two measurements that we take, relationships, are very much interconnected. Some people that you talk to on, say, like Twitter or something like that will actually change what they consider to be the what the definition of Contango is. They would say the definition of Contango is the slope between the VIX spot and the M1 future. But it really doesn't matter is what this shows. So with the VIX doing nothing, VIX unchanged here, down 3 cents, all of a sudden Contango's higher. And that's because, once again, the M1 future moved a little bit closer to spot, and that changed the slope of the this little line between the M1 and M2 future. So that's why we highlight when we see a big distance between spot and the M1. We highlight it because we know that could turn into increased Contango at any moment. All we need is that nothing to happen, and even if we got a little pop up in the VIX, let's say the VIX was up 10 cents today. Well, the futures might not move, so then if we got a pop, the futures probably wouldn't move, and all that would happen would be that the roll yield would come in a little bit. But with nothing happening, what we get is the front month future curving down a little bit, and that leads to increased Contango. So 7.2% Contango. You might think nothing's going on, but that's per month once again, folks. So you add an extra percentage point to that, and you can basically times that by 12 because for yearly return, yearly decay, yearly decrease in value, whichever you prefer to be the correct nomenclature there. Anyways, directly after this broadcast, I am releasing a new interview with Jacob Mintz, so that's exciting. I kept calling I called his website by the wrong name for a second. I was supposed to say Options Ace, and I said Market Ace. So I cut off like the first minute or two of the video because I was calling it by the wrong thing then. So it won't really make a difference. It's just part of the interest cutoff so that I don't misidentify his website there. It's funny how to choose the process of getting somebody to be interviewed on the show is always different, but generally the way it goes is something like this. I find someone that I think would be interesting to interview, and I reach out to them, and one of a couple things could happen. One thing that could happen, which is most common, is nothing happens. They don't respond whatsoever. And that happens about, I'd say, 90% of the time. The second thing that can happen is they can give me a polite no. And that happens sometimes, and I definitely appreciate when people do that and understand that people are busy, and going on a YouTube show should be pretty much closest to your last priority in life, and I understand that. And I've gotten polite no's from some pretty famous people in my mind, and I think if someone gives you a polite no, that you can come back to them after, like, I don't know, 6 months or a year and try again. And some people have actually said that to me, like, not now, but try again maybe once you're more famous or something like that. To which I say, my name is Famous Dave. I'm not famous enough for you. No, but I understand what they're saying. And I do appreciate when people actually respond, even if it's with a no. Another thing that I try, if someone responds at all, I'm going to do whatever I can just to, even if it's like, I might say to somebody, how about in a couple months? I know you're busy. How about in a couple months? Because I try to, when I send people messages, I try to sell it, It's like, hey, look, you're on the show. Maybe some of my followers will buy your product or watch your website, or, I try to look at it from their eyes and see, like, what could being on the show do for them. And so I've had some success with saying, like, how about in a couple months? I know you're busy, but in a couple months, maybe you could, like, come on. I've had some good success with that, because once once somebody actually responds to you and you have sort of a dialogue going on, if they're, a reasonably polite person, they don't feel right about, like, just totally blowing you off after they've already made some sort of initial contact with you. So you say, how about in a couple months? And so with this particular interview, what I was doing is, I went through on StockTwits, and they have those like verified accounts with the check mark. So I went through all the ones with the check mark, and I added them. I followed all those people, and I reached out to them because I figured, well, if they have the check mark, they must be interesting to probably you guys who are watching the show in some way. So I reached out to, like, all of them. Or not all of them, but a lot of them. I probably reached out to like 40 people in one day. And the ones that reached back ended up on the show. And I think Michael Lamont was one of them who reached out immediately. And then Jacob eventually responded to me, and he had a really neat response, which you can watch the interview to see that coming up, what his response to me was, and why he ended up responding to me in the first place. It turned out we had a connection from before. Anyway, so that one's coming up next. Was really excited today with Tesla. The rally yesterday in Tesla was pretty awesome. Tesla is an interesting stock. I've only been watching it for a couple weeks, but it's like gets bad news, but there's always is this like bid in it, and it's kind of the thing where, like, with the absence of sellers, it's going to go higher. And you could say that with any stock, but Tesla's there's definitely a bid out there from people. And, who knows what's going to happen in the future, but it definitely did rally yesterday. My thoughts are mixed as we're coming into earnings. We're going to have to see. I'm going to have to make a decision before next Wednesday when earnings I think earnings are after the close Wednesday. So I'm going to have to make a decision about what to do with that one. Now, I was on the Tesla thread a little bit in StockTwits, and somebody said, how could earnings be bad if the stocks can go up if they announce that they've sold X amount of cars. And to which I respond, well, maybe. Here's my view on earnings with stocks. Earnings come in good, stock could A, go up, B, go down, C, do nothing. Earnings come in bad, stocks could go A, up, B, down, C, do nothing. Tesla could announce that they've sold a zillion extra cars, or whatever the metric is. They could announce that they've gotten all these extra orders. Stock could go A up, B down, C do nothing. my point being that like there's so much information out there, and it's hard to tell what people that are trading Tesla are actually looking for and what is motivating them to buy or sell the stock. And maybe if I was a super expert in Tesla and watched it 24 hours a day and have been watching it for years, was following all the, I guess, chat rooms, or if they have chat rooms, I guess they must, then maybe I could be better at seeing what, like, quote unquote, the analysts were looking for or whatever. But, you know, I come from the side of the world, you know, I came from working as a floor trader. And so I don't believe a lot in analysts. You know, when I first started trading, analysts were basically paid to promote stuff, and they never gave bad ratings. And then there was like this kind of like revolution in analysts at a certain point. I think it was like in around 2000, maybe it was after 2008, but I think it was before then, where like all of a sudden analysts like started giving bad ratings for things and tried to be more transparent, and, you know, revealed when their company owned a stock, this kind of thing. But in general, maybe it's just bitterness. I had a girlfriend who left me when I was working as an auto mechanic, and I understand. I went to a top college, and she didn't expect me to graduate and start working as an auto mechanic. But she left me, and then within a year, I was a market maker making a lot of money. So too bad for her. But she became an analyst for a company, and I always thought analysts are like, you know, full of it to some extent. I think it's cool. So, you know, obviously some of them aren't. They go out to companies, you know, it would be neat to go out to like Apple and look at the factories or something like that. But in general, I don't believe any of that stuff. I think that, you know, I'm always skeptical. I think that like a company is going to rate something well if they're trying to get out of their shares or something like that. So anyway, so I said to the guy in the Tesla thread, I don't know if earnings are going to, I'm not long based on earnings thinking that they're going to have more cars built or something like that. I'm just, all I know is it would be good for me if the stock goes up on earnings, if I keep my position on, period. And so I'm not rooting for a certain whisper number or any of that stuff, because I just believe that's all out of our control, really. So I put this guy in the interview coming up after the show. He does, I guess he's been very successful in IQ this year, as have a lot of people. IQ being sort of the Chinese Netflix, Chinese version of Netflix is the way I've heard it described. The chart is behind me right now. Let me try to move out of the way here for a second. And, you know, the chart looks like waiting for it to resume a rally. You might want to consider. Now, the volatility is pretty high in these options here. It looks like it's come in a little bit. Maybe. I guess not. But it's definitely worth looking at. I would think it's definitely worth selling some out of the money. If you're bullish on this and you think it's going to have a decent slow or medium run up, then I would think sell some out of the money calls and hedge them delta neutral with stock, or maybe over hedge them a little bit with stock, and use that as a way to be long. That way, if let's say you sell we're looking at 17 August right now. Okay, stock's 33. Let's say you sell the 40 calls for 80 cents. Okay, it's showing them a 21 delta. So you sell 10 of these calls and you buy 200 shares of stock. Okay. The thing creeps in the next 22 days. If it creeps up towards 40, you'll make money on your stock that you bought, and you'll make money on your calls as long as it doesn't go above, you know, $40.80. It's a win-win. If it sits still, you'll make money on your calls. The only way you lose money is if it rips lower. You know, if you're long 200 shares, goes down. If you sell 10 calls, that's $800 worth of calls, right? So that means if you're long 200 shares, well, do the math. It can go down $4 and you break even, right? So you with me? You're long 200 shares, $33, okay? The stock goes down $4, 33. So it goes down to 29. You're going to lose, you're long 200 shares, you're going to lose $800, right? If it goes to 29. However, you sold 10 calls for $80 each. 80 cents each is $80 each. So you're going to break even at 29, okay? So anything between, if you put this trade on, buying 200 shares and selling 10 calls for 80 cents, the August 40s, if the stock is anywhere between $29 and $40.80 in 22 days, you're a winner. So that's a pretty big range to be a winner in. So maybe consider that trade. Now, you're going to need to have an account that is a full options account to do that, because if you buy 200 shares and sell 10 calls, then you effectively have 8 naked calls as far as margin requirements are concerned, and you have some risk. Certainly, if it rips, if it gets taken over at $100, you're not looking so good. Let's put it that way. But this is a trade, like I said, between $29 and $40.80. You're a winner. That's a pretty big range. You've got between, and if this starts rolling towards 40 and you start getting nervous, maybe you buy I don't know, some out of the money calls. You could buy if it runs up there real quick in the next week or something, then you could buy some August calls against them. You could buy just wings if you wanted, like 5 cents for the August 50s or something like that, just to protect you from like a doomsday type occurrence. But in the meantime, that would seem like a reasonable trade. So CGC, marijuana was exciting for a while, and now it's not been that exciting the last couple weeks. It's kind of in a lull, but I think it's still worth watching. This chart for CGC still looks very bullish to me, and I think that this is a chance. There's a buying opportunity here at some point. The exact point of where there is a buying opportunity is going to have to be up to you, but I think there's a buying opportunity here. Afria, same thing. Afria rolling a little bit lower again now. I'm a bag holder here, as they say. I bought the stock around 910 something, and I'm holding the bag here. I don't think it can go too much lower than here. I mean, it could potentially go down to like 5 at worst case scenario, but I don't see it going lower than 5. Especially with the approval, the stock market. Ain't it interesting? You get this big news. You get this big news from marijuana stocks like a month ago that we've been approved for marijuana to be legal for recreational use. You really couldn't tell it from the stocks, could you? I mean, a month ago we got this huge, awesome news, and nothing's happened. ACB, pull it up. Got that huge news, nothing happens. Stocks go lower. CGC, get that huge news, stocks go lower. So, the big time to make money was last December. That's when we got the rips in all of these. Look at last December, that huge run up. That was the time to make your money right here. Last October, boom, this huge rip up. But I think that these MJ stocks have another one of these rip ups in them, and I don't know where the catalyst is going to come from. It might come from the U.S. midterms, maybe like the political sense changes, the sentiment changes. We know that the current administration in the U.S. is not pot friendly in any way. Jeff Sessions, he is very anti marijuana. However, the catalyst could be getting close to next October, according to Justin Trudeau. The full legalization, like completely going through, is October of this year for Canada. So you know, I'm bottom feeding on these issues here. I'm accumulating down here. I'm going to start doing something in CGC. I'm looking at call spreads. I'm looking at cheap ways to get long, to get a long delta here. So CGC, you know, look out here too. You know, if you just want to take a little shot but don't want to spend a whole bunch of money, you know, maybe you get in here and you buy an October 35. You could buy October 35 calls. Okay, it's $10 out of the money. You've got 85 days. I might even go out to Jan. You know, you buy Jan 40s. You could probably get them for $1 if you wait on them. Jan 40s, you get 5 of those for $1. So you're spending $500. You've got 176 days for this thing to eventually take off. Now, going to 40, okay, it was at 30. It was at 36 a month ago. So strange. 30 days ago, it was at 36. So is it completely out of the question that 176 days? Okay, so that is that's like 6 times as long as a month. Is it inconceivable that it's going to be at 40 then? Not at all. In fact, I would say it's highly likely. So you bet $500, and you've got the leverage of 500 shares above 40 out through January. And if you get a pop, even if it doesn't go to 40, you get a pop, and you can probably sell September 40s against that for $1 if you get a decent pop, and put on a time spread for free, something like that. So I'm looking to buy. The other thing you could do is you could buy like if you got $1,000, buy 2 Jan 25 calls. Okay, they're already in the money. You need $5. A $5 rally is between now and next January to be profitable on that call, and you buy 2 of them. It commands 200 shares of stock. I think that you would rather get the Jan 40 commanding 500 shares of stock than the Jan 25 for the same price, because both of them you need up a few bucks. The Jan 25 you need it up $5. The Jan 40 you need it up $15. But with the Jan 40 you're controlling 500 shares of stock for $500, whereas the Jan 25 you can get one. You're only commanding 100 shares. From the example I was using before, buying 2 of these for $1,000, that would make you command 1,000 shares on the 40 strike if you were to buy 10 of these 40 calls for $1. So, it's a risk reward type thing. Which one you want to use? If you think that you can get a little bit decent bigger move, then you can have more leverage by buying one of these farther out of the money calls. But I think the other way you could play it is you could buy a Jan 25 and you could sell. It's not really worth it to me to buy a Jan 25 and sell a Jan 50 for 20 cents against it. If you're going to do that, you might as well just not sell anything against it. Why limit your upside to only receive 20 cents? However, you could consider doing something like the Jan 35. You could try to do like buy the Jan 35 call and offer on the offer the Jan 45 at like 80 cents. So you try to massage into a vertical. I don't really like most of these verticals in Jan because it looks like you're selling the farther out of the money option too cheap against whatever you're buying. It's just not a good ratio for me. If you look at something closer, like maybe buying the October 40-45, you could buy one for 35 cents, sell the other for 15. So you're paying 20 cents for a $5 spread. Now that's another good one too. You're paying 20 cents. You could buy 10 of those for $100. So you spend $100 on the off chance that this thing rips to the upside in the next 3 months. Certainly could happen. You're paying 20 cents for a $5 spread. So you're paying 20 cents to make $4.80. That's a good spread to put on. That's an awesome risk reward. if it comes in. Now, according to these prices, it's not very likely to come in, but like we said, a month ago it was trading 36. So could it be trading 40 in 3 months? Of course it could. So that's a nice, inexpensive spread that could come in huge for you. You'd love to bet 20 cents to make 480. So I might actually even put a little bit of that one on. Okay, so UVXY. You know, the lower we get with UVXY, the less juice there is in the options here. However, we've got a day to go. Let's take a look at the frontmost stuff. You know, the 9.5 strangle, very inexpensive with a day to go. 26 cents for the strangle. I probably wouldn't buy that. I'd pick one side I wanted to do. Obviously, we're closer to the, you know, 9 puts offered at 15 cents. That seems pretty reasonable to me. If you, I don't know. I would probably wait for some sort of pop-up to buy puts at this thing right now. Probably these puts for 15 cents are pretty fairly priced. However, I mean, I could see this take out the low tomorrow. It could do it. It certainly could. We get a nice rally tomorrow. You know, we get, you know, E-minis up 10, NASDAQ up 50, Dow up like 200, and the VIX, you know, goes to 1150, and this thing collapses down to 850. So the 9 puts for 15 cents don't look bad to me. But at this moment, I think it's aggressive. I love it when people come out and say, oh, there's nothing to do today. There's tons of stuff to do today. Let's look at somebody was asking me about call spreads to sell in UVXY. Okay, so 22 days to go. You could sell the, what would I want to do? Maybe, it's hard. Everything looks cheap to me. But 22 days to go, maybe you sell the 9.11 call spread. So sell the 90 cents. Buy the 11 for 49. So you get $44 for each one, and you need stock below 9 in 3 weeks. Do you think it's going to be below? I mean, I say stock. I know it's an ETF, so I'm just using stock as a shorthand. So this ends up in 3 weeks below 9. You collect $43 each time. Now remember though that you are risking. It's a $2 spread, so you're risking losing at most if you sell it for 44 cents. Well, if you're selling it for 50 cents, you'd be risking $1.50 at most. Since you're selling it for 44 or 40, you're risking $1.40, whatever, 47 right now. I'm sorry, 57 right now. So it just depends exactly where it is right now. But basically, you're betting. You're risking losing 3 to make 1, and that's just kind of the risk reward for all of these things right now. You've got 22 days. If we get a big spike in volatility, this thing's going to lose your money. So even with these call spreads, it's kind of like I'd rather do them when we get a little pop. You know, we're pretty close to the lows of recently in UVXY right now. If we look at the chart here, which is I'm in the way of, so let me move out of the way of that. Or I'll just move it up. There we go. We're kind of near the lows of recent times. So even if I'm selling call spreads, I kind of want to wait for a little pop before I do something, because it takes a little pop in volatility, and this could not see 9 again for a couple weeks. So it's not a great time to sell stuff now. If you are short, I would stay short, because this thing is going lower. I just talked about how we're in 7% Contango. So this thing is going to continue to roll lower. I don't really want to aggressively get short here, because, the VIX is right around 12 now, and all we need is like some crazy tweet for this to pop back up to 15. So I would say exercise caution. Again for longs, I don't think I would necessarily be getting long here. I don't like to get long at ever. So those of you who like to get long and make money doing that, more power to you. That's great. I I love hearing about people making money, but for me, this is kind of like no man's zone right now for me, because I'd rather wait until we get a little pop to if we get a little pop, maybe you can sell this 9-11 call spread for $1, and then, you know, you've got risking 1 to make 1. That I like that better. Do I think this will be below 9 in 22 days? I do. I think that we're going to break the all-time low probably next week sometime. It's just a question of how aggressively you want to go. My theory, my feeling on UVXY right now is I'm really waiting for it to split before I put on any really big positions in this. Now, you know, you want to get aggressive, not even aggressive, but the thing I was doing last year was I would look at the screen and I'd see October with 85 days to go, and I'd look at those October 19s and I'd be like, those are toast. There's no way this thing is going to be 19 in October, and I'd sell some of these. You know, it shows 148 vol on the screen. Now, 148 vol doesn't mean anything unless you're hedging stuff, and I wouldn't be hedging stuff. I would just sell the calls outright, and that's it. Now, if I were to hedge them delta neutral, and it shows a 25 delta, that would actually be a better trade for me in a way, because then if you get the pop, you can sell your stock out. But if it grinds lower and I'm long 25 shares against each one of these calls, if it grinds lower, I could end up losing money on the trade, even if I'm right directionally, if it doesn't, if it moves down too quickly. So if you're going to sell like out of the money calls, don't hedge them. I would say don't hedge them with stock. Or if you do hedge them with stock, as soon as you get the pop, you sell your stock out. This is what I was doing last year, and it wasn't working so well in the end, because, I mean, it takes so long for these to come off your sheets, and they definitely tie up capital. They've raised the capital requirements in these issues, so to sell one call costs you a bunch of money. It's almost as if you're shorting 100 shares of stock up there, and, you know, there's 85 days left, okay? This call is worth less than 85 cents, so it's less than $1 a day. It's decaying. So do you really want to tie up your capital to make $1 a day? I don't. I mean, it's a penny a day, so it's really literally $1 a day. I don't really want to tie up my capital and make $1 a day, even though, yeah, it's not going to be, I can guarantee it's not going to be 19 in October. However, you're tying up your capital, like I said. I would much rather, if you're going to be aggressive like that, sell the 10 call and buy some sort of wings at some point against it to protect yourself. But even that, I don't really like it, because this thing pops and you get run over. So I prefer to wait a little bit. You know, if you get a big pop and stuff goes wacky and these October 19 calls go up to like $2 or something, then maybe you unload on them. You know, something happens. We get a spike. VIX goes to 20. This thing rips back up to like 15, 16, and these calls go to $3, $4. You know, have at it, Haas. Sell a bunch of them. But right now, nothing going on. It's just like, not really interested. Thanks, but no thanks. All right, so video coming out. I'm going to leave you here with that, and we can go on to trade, make millions of dollars, and have a great day. And I will see you in the next one. I know you've just been watching me for a little while, so maybe tune off for a while, and when you come back, you got that cool video to watch at some point. So that's kind of exciting. I'll leave you with my favorite, Morris on piano. I love Inspector Morris show. If you haven't watched that, you should check it out. Cool. Thanks, everybody, for watching today, and I will see you in the next one.
The TV's on in the background, but I like this ambiance.
Bye. Thanks for watching, guys.